Welcome to the Ontario Mortgage and Real Estate Insights podcast, your go-to source for the latest developments, trends, and regulatory changes in the industry. I'm your host, Steve Hamoan, here to provide you with insights sourced from reputable news outlets to help you stay informed and make well-informed decisions.
This podcast is brought to you by Real Approved Inc., a trusted mortgage brokerage dedicated to helping Canadians achieve their home ownership dreams. Visit realapproved.ca to learn more about how our experienced team can assist you with your mortgage needs. Let's dive into today's episode.
Today, we're starting with some significant news from the Canadian job market. Recent data from Statistics Canada's Labour Force Survey has shown a promising turn with the addition of 83,000 jobs in June, which has surpassed economists' expectations for the first time this year.
Yes, Steve. It's definitely good news to see employment growth after a slow start to the year. The unemployment rate even dipped slightly to 6.9%, which is a positive sign. But it's important to note that most of these new jobs are part-time positions.
Absolutely, Janine. Part-time jobs accounted for 70,000 of the new positions. While it's a step in the right direction, we should be cautious since part-time employment might not provide the same economic stability as full-time jobs do. Still, it's a better outcome than the minimal growth we've seen since January.
That's true, Steve. And it's encouraging to see gains across different sectors, like wholesale and retail trade, healthcare, social assistance, and manufacturing. However, the agriculture sector did see a small decline, losing about 6,000 positions.
And let's not forget, the average hourly wages rose by 3.2% year over year, even though it eased slightly from last month's increase. This rise in wages can help support Canadians facing higher costs of living.
Yes, wage growth is always welcome, especially in times of inflation. But there are still some concerns on the horizon, like the recent tariff threats and potential economic uncertainties that could affect future growth.
That's right, Janine. Economists from RBC and BMO have noted that while the job data is positive, it may not be enough to alleviate concerns about the broader economic risks. These include the potential impact of new tariff hikes from the U.S. administration in August.
Exactly, Steve. And because of these uncertainties, experts like CIBC's Catherine Judge believe that the Bank of Canada might hold off on making any rate cuts this month. The full impact of these tariffs might not yet be reflected in the current data.
Indeed, Janine. Following the release of this data, we've seen Canada's 5-year bond yield rise to 3.00% and the 10-year yield climb to 3.48%. This kind of market reaction further signals that a rate cut might not be imminent.
It seems like we're in for a period of watchful waiting, Steve. We'll need to keep an eye on next week's inflation data to see if it impacts the Bank of Canada's decision-making process.
Let's move on to some interesting developments concerning mortgage renewals in Canada. According to a recent article by Gigi Suhanik, we're approaching a crest in Canada's mortgage renewal wave, and some Canadians are poised to save a significant amount of money each month.
That's right, Steve. It's estimated that some homeowners could save as much as $1,480 monthly. This is a huge relief for families who have been feeling the financial strain, especially given the rising cost of living.
Absolutely, Janine. The article mentions that this opportunity for savings comes as interest rates have fallen from their peak, and many homeowners are now renewing their mortgages at lower rates. This is great news for those looking to manage their household budgets more effectively.
It's heartening to see that some Canadians will finally get a break. With the cost of groceries and other essentials going up, having extra cash each month can make a real difference in people's lives. It could mean the difference between being able to afford extracurricular activities for their kids or not.
While it's a positive development, it's important to remember that these savings aren't universal. The benefits will largely depend on the terms of the original mortgage and the current market conditions at the time of renewal. Not everyone will see such substantial savings.
True, Steve. And some homeowners might still face challenges, especially if they locked in higher rates earlier or if their financial situations have changed. It's crucial for everyone to review their options carefully and perhaps consult a mortgage advisor to get the best possible outcome.
Definitely, Janine. It's all about being informed and proactive in managing one's financial situation. For those who can capitalize on these lower rates, it's an excellent opportunity to improve their financial health.
Yes, and as we always say, it's about working together with professionals who can offer guidance tailored to individual needs. With the right advice, Canadians can navigate these changes successfully and make the most of their mortgage renewals.
Now let's explore the latest findings from RBC on the uneven home price trends across Canada. According to a report by RBC's Assistant Chief Economist Robert Hogue, the Canadian housing market is experiencing mixed conditions as uncertainties surrounding the trade war begin to wane.
That's interesting, Steve. It seems like some regions are seeing a modest recovery, while others are still grappling with price declines. It's a bit of a mixed bag, isn't it?
Absolutely, Janine. The report highlights that local real estate board statistics show a modest increase in transactions between May and June in several major markets, such as Vancouver, Edmonton, Regina, Saskatoon, Toronto, and Halifax. However, these gains are only a small recovery from the earlier pullbacks experienced this year.
It sounds like there's still some work to do in those areas, but it's encouraging to see any form of recovery, even if it's just a fraction of what was lost earlier this year.
Indeed, Janine. The Toronto area, for example, is currently favoring buyers with an abundance of home buying options not seen in decades. The number of homes for sale continues to surge, giving buyers significant time to make decisions and negotiate prices. However, the Toronto MLS Home Price Index in June was still down 5.5% from a year ago, equating to more than $58,000 in lost value. The condo market, in particular, saw the biggest annual decline, dropping 8%.
That's a significant drop, Steve. While it's good for buyers to have more options and negotiating power, it must be tough for sellers who are seeing their property's value decrease.
Yes, and despite slightly improving affordability and easing trade war fears attracting more buyers in June, home resales only picked up 8.1% from May. Activity remains sluggish near cyclical lows amid growing job concerns.
And what about Montreal, Steve? I heard that the market there has stalled this year.
You're right, Janine. According to RBC, Montreal's recovery has indeed stalled due to the trade war. Home resales slipped for a third consecutive month between May and June, falling an estimated 2%. However, this pullback may be more related to fewer sellers entering the market rather than buyers withdrawing. New listings fell by a larger 7% from May, tightening the supply-demand dynamic further.
So it seems like there's still some price pressure in Montreal, with single-family homes and condos sustaining solid appreciation. It's a challenging landscape for both buyers and sellers.
Exactly, Janine. In Vancouver, prices continue to decline with the MLS Home Price Index dropping 2.8% from a year ago in June. This marks the fourth straight month of annual declines. However, buyers remain in control with active listings reaching a 13-year high in June. Despite this, home resales did rise for the first time this year, up more than 2% from May.
It seems like Vancouver is still in a buyer's market. That could be an opportunity for those looking to purchase a home, but it also indicates some underlying challenges.
Yes, and Calgary is experiencing a soft landing with inventory rising and prices softening. The city's MLS Home Price Index fell 3.6% below year-ago levels in June. Economists, however, see limited downside for property values due to aligned supply and demand conditions.
That's somewhat reassuring to hear that Calgary might not face a steep decline. It sounds like the market is trying to find its balance across the country.
For our final segment today, we're turning our attention to the Greater Toronto Area housing market, where it seems some neighborhoods are experiencing a slowdown in home sales. According to a report by Karen Longwell, homes in certain areas are taking longer to sell, with the average selling price in June 2025 down by 5.4% compared to June 2024.
That's quite a shift, Steve. It's always interesting to see how different neighborhoods react to market changes. It seems like buyers are becoming more cautious and perhaps more selective given the current economic conditions.
Absolutely, Janine. The Toronto Regional Real Estate Board reported a total of 6,243 home sales in June 2025, which is a 2.4% drop compared to the previous year. This indicates a market slowdown where homes are taking anywhere from 9 to 75 days to sell, depending on various factors like location and property type.
Right, and according to the digital real estate platform Wahi, the type of property and its pricing play a significant role in how quickly it sells. Some neighborhoods in Old Toronto, such as Rosedale, are seeing longer sales times, likely due to the larger homes and higher price points.
Exactly, Janine. On the other hand, areas like Oakville's business corridor along Cornwall and Spears roads are taking the longest to sell, averaging 75 days. It's crucial for sellers in these areas to be strategic about pricing and marketing to attract potential buyers.
And while it may seem challenging, this slowdown could present opportunities for buyers who are looking for more negotiating power or considering making a long-term investment. Patience and careful planning could pay off in such a market.
That's a great point, Janine. For both buyers and sellers, it's important to stay informed and work with real estate professionals who understand these dynamic market conditions. Making informed decisions can lead to successful outcomes, even in a slower market.
Absolutely, Steve. It's all about finding the right fit for your needs and being prepared to adapt as the market changes. With the right approach, both buyers and sellers can navigate this period effectively.
Thanks for tuning in to another episode of the Ontario Mortgage and Real Estate Insights podcast. We hope you found today's insights valuable as you navigate the world of mortgages and real estate.
Before you go, a quick reminder. Real Approved is here to make your mortgage journey smoother. Whether you're buying your first home or refinancing, their experienced team is ready to guide you with personalized support every step of the way. Visit realapproved.ca to get started and take the next step toward achieving your home ownership goals. Catch you next time and stay informed with the latest industry insights.